USDC depegging, we discuss. And banking is dominating the headlines. On one side, we have Bitcoin is a risk to profits. And on the other side, we have Circle's CEO stating we're trying to save crypto from the banks. Arbitrum announces the launch of its new ARB token. Gensler suggests proof of stake tokens are securities. And Europol shuts down crypto tumbler chip mixer. And Binance pauses UK deposits. Hello, everybody, and welcome to the Assets of Value podcast. Today, on 17th of March, 3 days a week, we connect to share our insights and perspectives on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization, a podcast not to be taken as legal or financial advice. Let's dive straight into it. Abe, what is the market looking like today?
Sure, Bitcoin has made a yearly high of 27K right now, just as we speak. The situation is extremely bullish after the quantitative easing strategy by Feds and after the long awaited Fed balance sheet boost, which also sits at a yearly high. I think market is ready to turn to the upside right now. We are seeing massive liquidity flows into Bitcoin, but not so much into altcoins. That means Bitcoin pumps, then take a rest, altcoin pumps, catch up, outperforms Bitcoin, and then Bitcoin pumps again. This is the usual market structure, and I believe we are about to witness something similar to this. Non financial advice as always, but I am extremely happy with the situation. And I'm glad how Bitcoin played out the banking situation to its gains.
It's great to see green and positivity everywhere that we look. So just quickly to run that off, in last 7 days, from a percentage increase, we've seen Bitcoin at nearly 36%, Ethereum just hovering over 26%, and BNB just over 25%. In 7 days, the increases are phenomenal. Great to see, great to see. And the market cap as well has shifted well into 1.1 trillion. And we are seeing a massive amount of inflow coming into the crypto space, as you mentioned. Extremely positive news all around. In our intro, we touched a few headlines regarding banking that has been taking center stage when it comes to crypto news, both in traditional financial markets as well as crypto itself. Let's start with the fiasco of last week of USDC depegging. This was once upon a time seemed as impossible. Now, USDC is backed by Circle, and since 7 days, a huge amount of activity has happened within both banking and in crypto banking space. Let's start with the depegging. How did that actually happen?
The depegging event was triggered by the collapse or imminent collapse of SVB, the Silicon Valley Bank. Later on, Circle admitted that the organization holds around $2.8 billion worth of funds or treasury with SVB. Even though that number sounds pretty big, but if you consider the market cap of USDC, which is more than 40 billion, then the 7% liquidity shortage isn't a big issue. However, the FUD took place and USDC dipped to 88 cents. That was when major players like Vitalik Buterin and other whales, they just swapped some of their savings into USDC, just get the stable coin for 12% cheap. And eventually, USDC returned to its peg and is currently trading at 99 cents, just 1 cent shy to a dollar. What this suggests is we have seen major depeg events in stablecoins before. For example, in 2017, USDT depegged to 67 or 68 cents, I don't remember correctly. And back in 2018 or 2019, we have seen USDC even debugging for a slight change like 93 cents or 92 cents. This has been going on with crypto, but the latest debug event was a cause of concern because it was related to a fall of a major bank in the US economy. Now the adventure for a decentralized stablecoin will kickstart. We all know that it's never gonna fade away, but I don't see a major contender right now. This is where Bitcoin came into picture. People thought, if I hold USDT, there's this FUD coming. If I hold USDC, 12% of my funds are in loss. So why don't I just buy Bitcoin and hope that it goes up? This is exactly what happened after the USDC FUD. Bitcoin rose 6% in a day and it crossed Meta in market cap. This was a major milestone event for all tech companies because whales and miners assume that tech money or reserve money will flow into Bitcoin pretty soon, and that's fueling the rally till date.
So many things to unpack there. Stablecoin being a massive issue, both centralized and decentralized. That could take up a whole deep dive on its own. But thanks for breaking that down. We move into traditional finance where they are concerned that Bitcoin is a risk to its profits. And this is the Horizon Bank Corporation, where it's clubbing together, saying Apple Pay or Bitcoin and other cryptocurrencies can change consumer credit behavior and consequently impact the interchange fee income. So banks are already cautious about the benefits that cryptocurrency brings and the cheaper funding costs. Now they're on the attack to either slow that down or discredit it, and even run advertising campaigns to say that crypto is not safe and banking is the way forward, and banking is also trusted. And on the other side, we've got the CEO of Circle, who is taking the complete opposite stance, stating that they are trying to save crypto from the banks, merely transferring funds between the Silicon Valley Bank that went down took so long. And because this event happened over the weekend, that depegging had a liquidity crisis, as you mentioned. Who's right in this situation? And should banks be worried? More importantly, can the traditional banking system survive alongside cryptocurrency?
1 year back in 2022, people were asking the same question, but the question was, can crypto survive along with banks? I'm extremely delighted that we are in such a situation to discuss that. Can banking survive along with crypto? This is amazing. But to be fair, to be practical, I think banking still has an edge because of the liquidity, because of the massive amount of liquidity and massive amount of demand supply mechanisms that's in place. For example, the current world is built around money, and money means cash, solid fiat money, not gold, not metals, not assets, not capital, nothing. Just built on solid fiat cash. So to imagine crypto overtaking that everything in a single day, it seems impossible. But there's this hope because the US president has come out on public and said US banking system is safe. That statement alone could trigger a lot of controversies, a lot of FUD in the Web2 world also. And people from Web2 world who were into commodities like gold will come into crypto. That's the situation right now. And that's why the question arises, can banking survive along with crypto? If you are a believer of technology like me, I think it is possible, but the time period or the time horizon that it will take might be another 50 years or 40 years. But it's coming, definitely, it's coming.
Certainly a narrative to keep a close eye on, especially with the volatility around stablecoins. I mean, the whole point of a stablecoin that it should be stable. Governments want to issue their own stablecoins, and liquidity just seems to be circling around the system. Who's going to win? We don't know. And with Gensler also trying to provide his view, but a lack of clarity, he's coming out to state that proof of stake tokens are securities, and he is taking a firm stance in that regard. So that also brings regulatory pressure in how cryptocurrencies are handled and transferred from point to point and each other. It's certainly a space that is going to go through the turmoil of regulatory pressures and also evolution, but the tech for sure is here to stay. We do think from a total value locked in perspective that we will just continue to increase and increase. If we bring Binance into the conversation here, they are also facing regulatory pressures, and recently their on and off ramp provider Skrill Limited that is going to stop providing services for UK deposits and withdrawals, which then leaves crypto native Binance looking for an on and off ramp partner. Now, it still has 9 weeks to find such a service, but it feels like the traditional payment intermediaries are almost having to backtrack and are being warned not to interact and provide services to these native crypto companies. What's your take on this? Is this something that is going to a situation where it's us vs them? It certainly looks like we've got old money and new money fighting it out right now. And looking at today, it looks like new money is winning.
Definitely, I agree. The new money, the electronic money, Bitcoin, is definitely winning. But it is winning the short race, as I mentioned before. And the long race is still to be fought over. But what crypto really needs right now is a new bank which is global, which is based in crypto, which can facilitate crypto to fiat payments in a go, no questions asked, and the bank can charge a fee on it. This is the next $1 million or $1 billion business that we will see in crypto. Maybe CZ will build one, or CZ can just buy a failing bank and make it crypto friendly. Just imagine if you have $100 in your MetaMask and it serves the same purpose as $100 in your fiat. Like go to stores, go to convenience stores, pay for $1 bill with USDT or USDC or with Bitcoin, like universally. And the bank will be able to sustain, and the bank will be able to create and facilitate that transaction without any notice or without any taxes or without any regulatory clearance. This is the best thing that can happen for crypto for the next bull run.
There's still a discussion to be had if we bring it back into crypto. Is the bottom in yet? Now, we do know that crypto does adhere to the global macro landscape, and if the appetite is either risk on or risk off, there is a question. As Q1 of 2023 closes, it looks to be closing in the green. As you mentioned, Bitcoin trading at 27K or thereabouts is the highest that it has been this year. Great to see, but there's another 9 months of this year to come, and there could be a lot of ups and downs that are in the pipeline. Let's end this week with a bit of positivity and Arbitrum. Anyone that was involved in their test network have received some airdrops, but there's a bit of an issue around there. What's the latest with Arbitrum and its airdrop?
A few months before, we had discussed the possibility of Arbitrum releasing a token, ARB or ARBI, and it has come to fruition. The foundation, Arbitrum Foundation, has decided to convert itself into a DAO, decentralized autonomous organization. And the best part is it'll airdrop ARB tokens to ecosystem users, maybe early contributors. And you can check whether you are eligible by going to arbitrum.foundation website. I think crypto community, after the massive airdrop of Aptos, will take it as a cherry on top, and this might influence the upcoming layer 2 solutions like ZK Sync, ZK Stark, and others. Scroll, there are plenty to airdrop some of the tokens to back to the crypto economy. It's like giving back to the ecosystem or giving back to the community. I see it as a potential trend, and the airdrop mania, the airdrop game, would be back again pretty soon. ARB will be releasing on 23rd March, and there are speculations that it'll launch at $10 a piece. It'll launch at $10 per token, and I think a fully diluted valuation of $100 billion.
Something to look forward to next week for sure. Let's end this episode now with a bit of alpha. We saw Aptos and Arbitrum. Will it end with another A and close it off with a triple A airdrop? Or what is the next biggest airdrop that we could actually expect in terms of anticipation?
I think it should be Scroll and ZK systems, for example, ZK Sync.
Okay, so Abe has mentioned Scroll and ZK Sync. They're the ones to look out for. What a great way to end it there. Love ending on a bit of alpha. it's been super fun. I'm glad you're able to jam with us today. That's it. Till next time. Thank you, everybody. We're signing off.